Hello friends and welcome to yet another Arctic Money portfolio update video. Last time we did this video in August and this was my portfolio back then, which you can see now in front of you. I remember from that video, I remember being kind of upset and sad a little bit of my performance since 2018 when I kind of started investing, and which is the beginning point of all these numbers you're gonna see next. I was up only plus 41%. I was losing to S&P 500 dividends reinvested by a lot. That was plus 128%. And the real benchmark I've been assigning to myself, the index investor who has been monthly adding the same amount of money to S&P 500 since 2018. That person was up plus 63%, so more than my portfolio, and of course I'm upset that I'm losing to an index investor. But in August I said to you that I don't expect this to go on forever. I'm expecting to catch up the index investor quite soon. Of course, I didn't know the time when I would catch them, but I can already tell you that I have catched in only 6 months or so the index investor, and I am beating the index investor right now. So let's quickly go through my portfolio, what it was back in August. Flow Traders is still in my portfolio, so is Sprott Physical Uranium Trust. They are still in my portfolio. You will see my portfolio in a bit, how it looks today as I'm filming this 7th of December. But this is the August portfolio, and from my third largest position was obviously CoreCivic, and then happened the election of Donald Trump as the President of the United States again, and a phenomenon called Trump trade, which took place, and it affected CoreCivic in a major way. And yeah, I think I made in dollar amounts the biggest profits I have ever made in my short investing career here. So why my portfolio is up very much more from August is mainly because of CoreCivic. There has been also other successes which we go through next, but CoreCivic might be the one component that made the difference and moved the needle, so to speak. Dr. Martens Ulta Beauty I still have in my portfolio. Alibaba 2 Carriage Services, I ended up selling that. Somebody might say a bit too early. I think I sold it around $32, and last time I checked it was somewhere in $40. Made a small profit though with that, so it was all good. BML is still in my portfolio. Kamux is still there. Uranium, Global X Uranium is still there. Tyson Foods I ended up selling. Quite a similar story to Carriage Services. Sold both United States concentrated companies due to the fact that I see the US market very overheated, and basically the two companies right here, in my opinion, were trading at their fair value when I sold them. So as I thought that they were in fair value, there were companies in my watch list that I thought would present a better opportunity, so I ended up selling Carriage Services and Tyson Foods strategically to get some more capital to opportunities I perceive better. Let's talk about that in a minute. And Burberry I still have in my portfolio. So what has happened since August? Well, obviously big Trump trade and my selling of CoreCivic happened, which made pretty huge profits for me that moved the needle to what you will see next. And Carriage Services and Tyson Foods, as I said, are gone. So my portfolio has gone from US listed stocks and pure play US plays that operate only in the US market. Basically Carriage Services and Tyson Foods are out, and CoreCivic. Actually all of these have all their revenues and profits coming from US. So in short, what has happened in my portfolio is that I have been telling you already for a long time that I think the US market is overheated. I am telling you the same thing now more than ever, and now it shows in my portfolio too that I think Tyson Foods is in S&P 500. Ulta Beauty I'm actually not sure. That remains the only US focused company. operating only in US in my portfolio, Ulta Beauty that is. But as I said, CoreCivic, Carriage Services, Tyson Foods are gone. I have diminished my position and my exposure to US market. It's almost in minimum. As said, Ulta Beauty remains the only pure US play in my portfolio. Of course, many of the names you see in front of you are global names that clearly have also big exposure to US market. Well, if you're a global company, you most likely have quite a big exposure to US market still. So these, if there is something market crashes happening in US, I don't think any company pretty much in my portfolio except for Flow Traders and maybe Uranium can be immune to any market crashes happening in the United States. Obviously, as the leader of the financial world, market crashes in the US will have effect on huge number of companies, and there will only be a small batch that would benefit. Flow Traders might be one of them. Uranium might be unaffected by that sort of things. Just highlighting these, as you can see, they are still a big part in my portfolio, as we will see next. But the big storyline is that I have been saying to you for many years already now that I think United States is overheated, and I have positioned my portfolio exactly like that. And without further ado, let's check how my portfolio looks today, 7th of December 2024, when I'm filming this. And here you can see it right now on your screen. So here it is, my portfolio today. And let's first tackle the results. As I said, Trump Trade, CoreCivic, Carriage Services, Tyson Foods, small profits there. I was up in August, plus, as you can see, plus 41%, and now I'm up plus 76%. So that's a nice uptick from Arctic Money portfolio. And what is more important to me is that if you check Index Investor, who is the benchmark I want to beat, Index Investor with monthly additions in S&P 500, so a person who started investing back in 2018, same time with me, and invested every month the same amount of money to S&P 500 index. That person is up in the same time as me, plus 69%, so I am beating the Index Investor with monthly additions in S&P 500, dividends reinvested. I am beating that person again, and I am happy for it. I truly am. I hope I can leave this Index Investor I'm competing against behind me now, move forward, and eventually try to catch up to S&P 500 index itself with dividends reinvested. That obviously, as you can see on the screen, is up plus 132%. It's a huge number. Everybody knows how hot S&P 500 has been as an ETF since 2018, maybe from these big ETFs. So we can say that only the tech-heavy Nasdaq ETF has probably performed better than S&P 500 during this same time period. But S&P 500 is probably, I'm pretty sure it is the most popular ETF in the world. So that obviously that is why I am benchmarking myself against it. And as you can see, just to open, I think it's more fair because I didn't have all my money to lump sum invest in 2018, and most of the people don't have this kind of opportunity. So it is the fairest comparison to make is me against Index Investor, who does monthly additions in S&P 500. And things changed, as I promised you in August, and now they have changed. I am again beating the Index Investor, and that is the fact here. So what is in my portfolio at the moment? Lower left-hand corner, you can see my cash position. Currently, I would describe it about 10% of portfolio currently. So I'm not fully invested, but I am pretty much invested. I have some firepower left to take advantage of some market crashes with my stocks. Recent months have seen actually many of the positions, even which you see here, turn green in my portfolio, and I have been buying them with little bit lower prices than what they are trading now. So I have been able to, actually, when you look at my portfolio now, most of the things are on green side. I would say the only one that is on red and I'm still losing with the current positions you see is Kamux, the Finnish 8% of my portfolio, the Finnish company who operates in Finland, Germany, and Sweden, selling used cars. That one is on the red side, but pretty much everything else is already turned green in my portfolio, even with my current positions. So, Flow Traders, nothing changed here. As said already, liquidity provider from Europe, and should be unaffected if there are market crashes. Go and watch my Flow Traders video. And actually, if you are more interested now in any of the companies you see in front of you, I have basically videos of all of them and deep dive videos on my channel, Arctic Money, so go and find that one if you are more interested in one specific stock or company rather here. So I'm not getting deep into these now to keep this video a little bit shorter, so go and watch the specific video from my channel on any company you find interesting. Flow Traders, 16%. Dr. Martens is a big position now in my portfolio. I have been growing that during the last 6 months. It's now my second biggest position, well, maybe third biggest if you combine the uranium positions I have. But still, I have a big bet on Dr. Martens, the boots manufacturer from UK. Sprott Physical Uranium Trust, 12%, combined with Global X Uranium ETF, 9%. That would make my uranium position 21% together, so I'm still heavily invested in uranium. Continuing from UK fashion market, I have Burberry, 9% big position now in my portfolio. You will see a theme in my portfolio now that I believe in luxury, I believe in retail, and that's where most of my money is at, as you can see. Then we have Ulta Beauty. As said, that's the only company that is from US market, focusing only on US market at the moment. Big position, still 9%. Just released earnings and just went up very much in stock price, so that turned to the green side quite a lot for me. But I still, I have to look at it more carefully, but I remember that I still feel like it's not trading at its fair value yet, so holding on to that. As said, Global X Uranium ETF. Uranium, still a big bet for me. I have uranium videos on my channel too. Go and watch them and you see why I'm bullish on nuclear energy and uranium. That is the fuel for anything that produces nuclear energy. Alibaba, long time position in my portfolio, still on the losing side. Not by any huge, to be honest, it has been so long in my portfolio and I have even changed to broker in between, so I don't even know how much it is on the red side, and not hugely, but if I would need to guess, maybe 10%, 15% on the red side still. Long time position in China I've had since forever in my portfolio. Everybody knows the story with China and Alibaba. The company is undervalued. Obviously, that is why it's in my portfolio, but there is the China risk and so forth. Well, I think if you're watching my channel, you know the story with Alibaba pretty well, I assume. Kamux has said, only Finnish company from my homeland, Finland. Difficult investment, as I have said in my deep dive videos, because it does not have a moat, the company, and this is a consolidation play, kind of like Carriage Services was for me, the funeral home cemetery operator from United States. I sense profile Kamux as a little bit of similar investment type of thing in my portfolio. Still, I feel like Kamux is undervalued quite a lot, but it's always a risky play to invest in something that you acknowledge yourself that this company doesn't have a moat, and Kamux does not have actually. This is a consolidation play from me. Then BML 5%. Biomedical Laboratories is the name where BML comes from. Company operating in Japan, only in the Japan market, so only exposure I have in Japan. Origin Enterprises, the most recent addition to my portfolio, and I just released a video of this agriculture tech consultancy firm. Go and watch that video and learn more about Origin and what they do. Small position for now, but I would be happy to increase Origin as well as maybe Amsterdam Commodities, which is a trading business in tea, herbs, spices, what you have there. Both of these have are components in the global food industry. They operate in that space. So food is something I'm always looking at. I have a little bit even working experience in my life from food industry. So I would say it's inside my circle of competence, so to speak. I at least hope so. Origin and Amsterdam Commodities are companies I would love to invest more money in them, but the valuations are so that they remain still small positions, but I would be happy to grow them. And then you can see a bunch of small positions. Crocs, the sandal maker, has re-entered my portfolio. First time I bought it, it was $60. Now it's somewhere above 100. But what can you do? Crocs just seems like a company that keeps on winning, and the valuation, I have done a couple of them, always looks better the next time you do it. So it's pretty unbelievable company that this sandal maker seems so resilient, and even though one might assume their ugly sandals would be easy to copy, there is something special in this company, I have to say, and it has now re-entered to my portfolio, small exposure. Then two luxury companies that I'm hoping to see go down in price so that I could build my positions bigger. Louis Vuitton, Moet Hennessy, and Kering. Both Kering has brands such as Balenciaga, Gucci, and what else you have there. Louis Vuitton, Moet Hennessy, obviously the biggest luxury company, one of the biggest companies in Europe. Everybody knows it. Huge number of businesses beneath it. So true conglomerate business of everything relating to luxury fashion and so such a lifestyle, let's say. So this is my portfolio. This is how I have positioned myself, as I already think I mentioned. You can see that themes of flow traders and uranium are not correlated to any bigger ETFs, S&P 500 or markets or such. They are kind of special place. And on top of them, you find luxury and fashion companies, Dr. Martens, Burberry, well, retail, also Ulta Beauty, and then Crocs, LVMH, Kering. So I am sensing that there is value in fashion and luxury industry. Let's see how this one pays off. Of course, it feels weird that I have so much retail, so much luxury, so much fashion in my portfolio. 1 year ago, wouldn't expect this to be my portfolio for sure. But what can you do? I'm sensing that retail and luxury has been beaten down in stock prices pretty badly, and these are strong brands I feel that are in my portfolio that have existed for ages, many of them, and I'm seeing that the temporary headwinds they are facing is more related to the economic environment we are living in with inflation and such, everything that has happened throughout the recent years. But should things get better, I think these retail and luxury companies will do amazingly well. Obviously, I need to think how much more money I'm willing to put in so correlated industries, and I believe like Burberry, Dr. Martens, LVMH, Kering, even Crocs, maybe Ulta Beauty, they correlate probably a lot in their prices, so you have to always keep that some degree of diversification and some degree of risk management in your portfolio, obviously. But to be honest, I think my portfolio right now is well balanced. What happens next is obviously, well, you know how I do my investing. If you're a fan of Arctic Money, it's value investing, and should there be unwarranted stock price drops, I will increase these positions accordingly. I have made valuations on them. I have differing risk levels to them, but I follow my own valuations and buy the one that looks like a best opportunity. And as said, I'm happy with the balance, even though there is a huge degree of retail and luxury at the moment. And yeah, let me know in the comments, what do you think of my portfolio? Is something do you maybe own something yourself? Do you think some of these are bad investments? Let me know. Always love to hear some criticism and good justifications on your criticism, why you think some company should be in my portfolio or shouldn't be. As said, things in the summer it was looking pretty bad compared to index investor. Now it's looking a lot better already, and I just want to keep on beating the index investor even more. I want to be catching up on S&P 500 ETF dividends reinvested itself. which is not even a fair benchmark in my opinion, but I want to beat it still. I want to keep on doing all the time better results, and let's see how it goes. I think hopefully you will see some stock analysis in the future if I find new companies, even though my watch list is pretty full at the moment. Starting next year, obviously there will be many full year results coming, so I will update my valuations, and that will at least we will make, or I will make, risk reward matrices for you where you can see how valuations and stock prices have been changing, and you can with risk reward matrix videos I have on my channel, you see what I think are the best opportunities in the market. With the portfolio I have just shown you, I want to keep things transparent so that you know I have put my money where my mouth is, so to speak, and I'm the best risk reward opportunities. I think I'm invested in those myself, so I have skin in the game. This is how I do Arctic Money, and if you like this sort of content, like this video, subscribe to the channel, and thank you for watching this one. See you in the next one. Bye bye.